In this part of the course we will learn about technical analysis indicators and what can they do. What is moving average? A moving average, MA, is a widely used indicator in technical analysis that helps smooth out price action by filtering out the noise from random short-term price fluctuations. What is the average directional index, ADX? The average directional index, ADX, is a technical analysis indicator used by some traders to determine the strength of a trend. The trend can be either up or down, and this is shown by two accompanying indicators, the negative directional indicator, DI, and the positive directional indicator, plus DI. Therefore, ADX commonly includes three separate lines. These are used to help assess whether a trade should be taken long or short, or if a trade should be taken. What is the relative strength index, RSI? The relative strength index, RSI, is a momentum indicator that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock or other asset. The RSI is displayed as an oscillator, a line graph that moves between two extremes and can have a reading from 0 to 100. The indicator was originally developed by J. Wells Wilder Jr. and introduced in his seminal 1978 book, New Concepts in Technical Trading. What is moving average convergence divergence MACD? Moving average convergence divergence, MACD, is a trend-following momentum indicator that shows the relationship between two moving averages of a security's price. The MACD is calculated by subtracting the 26-period exponential moving average. What is volume? From the 12-period. Volume is the number of shares of a security traded during a given period of time. What is a candlestick? Candlestick charts are a type of financial chart for tracking the movement of securities. They have their origins in the centuries-old Japanese rice trade and have made their way into modern-day price charting. Point 1. Some investors find them more visually appealing than the standard bar charts, and the price actions easier to interpret. Candlesticks are so named because the rectangular shape and lines on either end resemble a candle with wicks. Each candlestick usually represents one day's worth of price data about a stock. Over time, the candlesticks group into recognizable patterns that investors can use to make buying and selling decisions. Now you are ready to start learning the secret technical analysis method that made us successful in the stock market.